We are 20 minutes away from the close of trade here in Manila. Philippine shares in the green again today. As we speak, the index is up by 0.5%, 35.6342. The broader all shares also in positive territory. Now, First Metro Security says the local bourse is likely taking cues from a firmer regional backdrop, with offshore sentiment still supported by tech-led strength, even as volatility lingers. Although follow-through may remain selective rather than broad-based, keeping trading largely range-bound as investors stay attentive to flows. Near-term positioning is likely to be cautious ahead of the Philippines' GDP release tomorrow, Thursday, which should shape risk appetite and near-term conviction. While Regina Capital says the index remains above key moving averages, which is a good thing, with a MACD now showing a bearish crossover affirmed by expanding red histogram bar, suggesting selling pressure is imminent or could potentially consolidate in the near term. It adds, despite momentum cooling, keeping an eye out on entries at support levels for potential rebound is recommended. You're watching Market Edge. I'm Michelle Ong. Good afternoon from the Philippines. Our top stories today. As the clock ticks on the Fed's rate decision, global stocks are headed for their longest winning streak in a month, led by tech, which is also driving Asian markets to fresh records. The US dollar recovers slightly after falling to its lowest level in almost 4 years. Philippine shares in the green for a second day. In corporate news, Manila Water secures up to 27 billion pesos in a BDO loan facility for the 𝐷𝐻𝐈𝐍 project. Surpass unloads shares from an Indonesian venture, and Avida Land launches the 3.1 billion peso 𝐉𝐻𝐈𝐍 Katipunan. The details in our corporate wrap. Government revised downwards the already anemic 4% GDP growth from Q3 2025 a day before it announces Q4 and full year 2025 numbers. Citigroup, while keeping a below consensus forecast, is staying constructive on the Philippines. And later, we check the pulse of the Philippine business community. PCCI's new head, Ferdinand Ferrer of the EMS Group, joins us to talk obstacles and opportunities for 2026. We begin with our market minutes. The PSE index in positive territory after an initial dip this morning. And we are seeing this bounce led by the mining oil sector again, plus the services counters. This as the peso opened slightly stronger at 58.85 against the US dollar from yesterday's close of 59.085. Let's now flip the board, see which stocks are actively traded. There you go. ICTSI, last year's top performing index name, still up 3.5%. Digi Plus also higher 1.7%. BDO by 1.1. On the downside, we are seeing RCR, which is expected to join the PSE index next month, down 1.1%, following news of Robinson's Land doing a block sale of its shares before that inclusion, while Ayala Land is also down, feeling a little bit of pressure by 1.4%. And now, a look at the local corporate headlines we are watching today. Manila Water signs a 15-year term loan facility of up to 27 billion pesos with BDO Unibank to finance the acquisition of 92.97% interest in 𝐷𝐻𝐈𝐍 project. Meanwhile, Surpass is selling its 49% equity interest in PT Sembilan Digital Investama, or PT-SDI, which it acquired back in 2015. PT-SDI wholly owns PT 9 Lives Interactive, which is a licensed mobile content developer in Indonesia. Surpass expects to receive around 17.6 million from the sale, which it can use for general and working capital requirements. And in case you missed it, Avida Land launches 𝐉𝐻𝐈𝐍 Katipunan, a new high-rise residential development in Quezon City, backed by 3.1 billion investment. Ayala Land's mid-income residential brand, citing a relatively limited new condominium launches in the area, despite it attracting steady residential interest due to its accessibility and its position as an education hub. 𝐉𝐻𝐈𝐍 Katipunan, a development with 33 residential floors, incorporates climate-adapt innovations, including heat-reducing materials and rainwater harvesting systems to address the challenges of a changing urban environment. Scheduled for completion in September 2030, selling price begins at 6.7 million pesos for a 21 square meter property. Zooming out now to the rest of Asia. Asian markets inching up on diversification bets after concerns over unpredictable policymaking in Washington pushed the dollar to its lowest level in almost 4 years. The MSCI APAC index now up by about 0.75% to a record, with a gauge of tech stocks also setting an all-time high, with memory chip maker SK Hynix, among others, leading the pack. No wonder the Kospi index is still up here, jumping 1.7%. The Hang Seng from Hong Kong also higher by 2.4%. Well, Indonesian stocks, we don't cover Indonesian stocks, but just important to note, it plunged 7% after MSCI Inc. raised concerns about their investability. Now, Asian currencies in the spotlight, still gaining as the dollar sank to levels last seen 4 years ago, as investors turn cautious towards the world's reserve currency amid unpredictable policymaking from Washington. The Malaysian ringgit, Thai baht, and South Korean won all appreciating, and China strengthening its yuan fixing by the most since August of last year, following the Bloomberg Dollar Spot Index sliding to its lowest since February 2022 during the U.S. session. The greenback has since pared some of the losses from Wednesday, with the greenback now appreciating against all of its group of 10 peers.
I think it's great. I mean, the value of the dollar. Look at the business we're doing. No, dollar's doing great. You know, it's very interesting. If you look at China and Japan, I used to fight like hell with them because they always wanted to devalue their yen. You know that? The yen and the yuan. And they'd always want to devalue it. They devalue. And I said, not fair that you devalue, because it's hard to compete when they devalue. But they always fought, no, our dollar's very good.
Despite Trump's great dollar rhetoric, the dollar tumbled over 9% in 2025 and has started this year on the back foot, already down by about 2.3% for the month of January. Now, elsewhere, gold still up there, gaining 0.3% to a new all-time high, while silver traded just short of its record. Now, in specific stocks we are watching China Vanke Company, which got more breathing room as it prepares what would be one of the country's biggest ever restructurings after holders of 2 yuan bonds accepted the developer's plan to delay the bulk of those payments by a year. Wall Street futures also positive on the Fed's first decision day of 2026. Let's now take a look at the board. Wow. The tech-heavy composite, NASDAQ composite, futures up by nearly 1%, followed by the S&P 500 gaining by 0.4%. Now, the major indices capped Tuesday's trade in the green, with the S&P hitting a new record and the NASDAQ soaring to its highest level since October. The Dow Jones, though, wasn't so positive as healthcare stocks tumbled amid a U.S. plan to hike Medicare insurer payment rates. It is a busy day on Wall Street, with mega cap tech earnings due out after the closing bell, while the Fed announces its first rate setting for the year that is due early Thursday morning, Manila time. While watchers expect the central bank to keep its rate steady, they'd also be waiting for clues on the path of its monetary policy moving forward. The dollar, meanwhile, pared some losses after a gauge of the greenback fell to its lowest level since early 2022.
Well, market being up is actually a trend that we've seen since the beginning of the year, with a little hiccup last week. The Dow being down is really being dragged by a lot of the insurance companies. The S&P is close to record, and it's actually a pretty good day unless you're an insurer.
Looking at European markets, they're also set for a higher open. Bullish sentiment there drove stocks up on Tuesday after the European Union inked a landmark trade deal with India. It's deemed the mother of all deals, as it involves about a quarter of the world's GDP and a third of global trade. The region stayed up front, pretty quiet today, though there will be a slew of corporate earnings, plus investor anticipation of the U.S. Central Bank's policy decision. Back here at home, a downward revision for an already slow Philippine economic growth. Government today cutting the GDP growth rate in the third quarter of 2025 from the initial 4% to now 3.9. The Statistics Bureau says major contributors to the revision were slower activities in electricity, real estate, as well as accommodation and food service activities. The previous 4% growth, a result of slower state spending on public works amid a corruption scandal, was the slowest expansion rate since 2021. The downward revision comes before the release of the full-year growth data on Thursday. Watchers believe tomorrow's figure would fall below government's official targets. Citigroup is highlighting strong growth potential for the Philippines, even as global markets face slowdowns and policy shifts. At a briefing in Manila, Citi said emerging markets remain key drivers of global trade and investment, with the Philippines standing out for its young workforce, strong balance sheets, and reforms that open the door to more foreign capital. Citi's top economist noted, while growth has taken a short-term hit from slower public investment, it sees no systemic risks and even points to broad opportunities across finance, infrastructure, and services. The bank adds it remains bullish on the country's medium to long-term outlook. Despite global economic uncertainty, Citigroup has a below-consensus forecast for Q4 GDP. It sees the Philippine economy slowing further to 3.4%, and because of this, expects the Philippine Central Bank to cut again this February. The Philippine government is turning 2026 into a critical delivery year aimed at speeding up development and restoring public trust through tighter governance. The Economy and Development Council says the focus is on fast-tracking education, health, food security, jobs, and major infrastructure projects. Economic managers say slow execution and fiscal pressures mean sharper priorities in the 2026 budget. The government is also rolling out tech-driven monitoring systems and banning political branding in cash aid programs as it positions the ASEAN summit as a showcase for delivery and investor confidence. Meanwhile, the Bureau of Internal Revenue rolling out a new taxpayer service aimed at making the country more investor-ready. The Registered Business Enterprise Taxpayer Service, or RBETS, will centralize tax administration for firms enjoying investment incentives under the Create More Act. The program includes express counters or green lanes in major economic hubs like Clark, Subic, Metro Manila, and Cebu, allowing companies to process tax concerns in one place. Finance Secretary 𝐉𝐻𝐷 says the move reduces red tape, improves predictability, and signals that the government is serious about ease of doing business. One of the resigned commissioners of the Independent Commission for Infrastructure speaks up about the country's problem in corruption. She also urged for more transparency in partnerships between the business community and government. Jackie Pascual tells us more.
The former commissioner of the Independent Commission for Infrastructure, Rosana Fajardo, said that corruption is so ingrained in the country that it would take several lifetimes to end it. She spoke at the Foundation Day of the Philippine Business for Social Progress, where she highlighted the need for the country to go back to values, noting that many of those linked to corruption are intelligent and capable beings who knew how to hijack the systems in place.
Probably if you want to correct government or correct corruption, then it would take several lifetimes, because then you would probably need to take out everyone who is part of the system. When I was in the ICI, and then we were trying to understand the budget process and then the DPWH processes, you would say that there are processes in place and then there are controls in place. The issue really is that people do not want to follow certain procedures, certain control points, and intentionally have overridden these controls.
What frustrates her even more is some have the gall to say nothing was wrong.
How come that the corrupt and those who have wronged us are even proud, mas matapang pa sila, mas they can actually stand in front of people and say, you know, that there's nothing wrong.
But she remains optimistic the issue can be resolved, as she also urged Filipinos and the private sector to demand more accountability. PBSP officials agree and say that the private sector also needs to be more proactive in collaborating with government and civil society groups to help the country in all aspects, including in poverty alleviation, environment, and education.
Are moral values important for a corporation, for business? The answer is absolutely. If there's any legacy I would like to leave in this, with our people, it is not so much how much profits or how much wealth our group has created, but to prove that any Filipino, even in binding, can succeed by being honest.
We should not look at CSR as charity. I think CSR should be part of corporate strategy. And that corporate strategy means that we should leverage the core strength of the company for corporate citizenship.
UP School of Economics professor Shelo Magno, however, cautions the private sector against just dealing with government, saying civil society groups must also take a role for transparency.
Private sector and government partnership can facilitate things. But the reality is it also becomes a breeding space for corruption, right? You can rent seek, easier to talk to government officials because of your private relationship.
Fajardo agrees, saying these behind-the-scenes negotiations should be more transparent and involve other stakeholders so the whole country benefits and not just a few. Jackie Pascual, ABS-CBN News.
A proposed measure that's now in its third reading at the Senate aims to address the classroom shortage in the country by allowing the participation of local government units and the private sector. Let's get more details on that from Izzy Lee, who now joins us on the line. Hi, Izzy. What can you tell us?
Michelle, the local government units, or LGUs, and public-private partnerships, or PPPs, can now take an active role in building classrooms previously reserved for the Department of Public Works and Highways, or DPWH. This was a topic discussed during the Mayor's Dialogue titled Accelerating Classroom Building in Cities and Municipalities, held this morning at the Macabagong San Juan National Government Center and attended by around 200 mayors from across the country. According to Senator Bam Aquino, chairperson of the Senate Committee on Basic Education, the proposed Classroom Building Acceleration Program, or CAP bill, which is now on its third reading, allows the LGUs to construct classrooms alongside the DPWH. Although the bill has not yet been enacted, local governments can already begin implementing classroom projects under special provisions of the General Appropriations Act, Basic Education Facilities Fund. Aquino said he is hoping the CAP bill will be passed by February, stressing the importance of timely and cost-efficient implementation by local government units after previous classroom projects implemented by the DPWH were found to be overpriced, with costs reaching around 3 million pesos per classroom. Currently, there is a shortage of 166,000 classrooms, which could grow to 200,000 by 2028 if immediate action is not taken, according to Aquino. This year, the government has allocated 66 billion pesos for classroom construction, targeting 25,000 to 30,000 new classrooms. Priority areas include Region 3, 4A, NCR, and Region 7, which have the largest classroom gaps. The program will operate through three modes: LGU-led construction, where local governments lead procurement, supervise construction, and ensure compliance; DPWH-led construction; and PPPs. Secretary Sonny Angara of the Department of Education said the budget will be strictly monitored to ensure transparency and accountability. He also explained that the public will be able to track projects through the Para Lang Bukas dashboard, where information on the construction of classroom projects will be made available. He added that unfinished classrooms are being addressed through a coordinated schedule with the DPWH. Regular reports will also be required from the agency. LGUs interested in participating must submit a letter of intent by February 4. The Department of Education will identify priority schools and sites, provide standard classroom designs, review and approve plans, conduct inspections, and release project funds in tranches. Back to you, Michelle.
Thank you very much for that update, Izzy Lee. Anemic growth, turbulent politics, volatile geopolitics, are those a thing of 2025? How is 2026 shaping up to the business community? Let's ask PCCI President Perry Ferrer. He joins us live via Zoom. Hi, Perry. Happy New Year. Welcome to Market Edge.
Hi, Michelle. Good afternoon. Happy New Year. And thank you for having the Philippine Chamber of Commerce on your show.
All right. So, Perry, I want to start with a big picture. What's the Philippine economy look like from your lens right now, and how do you think it fits into the global economic narrative? Is the setup constructive, especially coming from what many describe as a low base last year? I mean, are things generally looking green?
Well, as you said it, coming from challenging, especially in the fourth quarter last year, we need to build back the credibility of the Philippines. The Philippines has a lot of potential, but I believe the scandal, we need time short period of time to build back the credibility to the business community, both local and foreign investors.
A lot of people say that, this scandal has put a lot of investments on hold. It's hurting both investor and consumer confidence. But is it really? I mean, when you look at the numbers, have plans been stalled because of this scandal, or has the scandal become the perfect excuse or the perfect scapegoat for what's really just structurally a weak economy?
When from our point of view, there were projects that were put on hold, or at least only part of the expansions being realized, because investors are saying, where is my money going? So we see it, and we see the market, especially on the tech market, and the tech industry is booming globally and regionally. In the ASEAN, we see tech industries or the tech stock markets continue to rise. So the Philippines, we are right in the center of the region, and we do have potential. We just need to get over this scandal and show the community and show internationally that there are actual real reforms happening together. And this is the key, together with the private sector. I believe the private sector has a big role to play. We cannot sit on the sidelines. We cannot keep on demanding reforms. We need to be part of the reform and to be partners with the government in implementing and monitoring these reforms.
Well, we have heard from government about their big, bold reforms. I'm sure you've seen the list. Are you now seeing a confluence of, a lot of stimulative fiscal policy reforms coming up? For you, which appears to be the most promising, and what do you think was skipped or what's missing from the list?
What we're seeing, there's a lot of reforms being touted or being announced. Where the private sector wants to be is we want to be part, and we want to be partners with the government in these reforms. For example, we want to be part of the local development councils or the regional development councils. This is where all this infrastructure and all this spending start. They look at programs, they look at projects, where to spend, and that's where the business community can say, wait a minute, we don't need that. The business community doesn't need that, or the community in itself don't need that. But there are a lot of projects, and we're glad that the infrastructure projects are starting to go. We need it. We saw the impact of lesser spending, public spending. We saw the impact in our GDP. So we need to build back and go back to spending, but the right spending at the right cost.
Right spending at the right cost. So you want to be part of the local and regional development council. Who would be in authority to give you the go signal to be part of these councils?
I think the NEDA will be working with the NEDA for the private sector to have a permanent seat at this council.
Because right now there is none.
I believe there is a law, but it is not implemented. Or if they ask for a private sector representative, it is not in all the discussions. We want to be involved in every discussions on where the taxpayers' money is being spent. It's not enough to identify the project. We want to be also heard, and we want to be part of how much it will cost the project. Once the project is budgeted and there's cost, well, who knows if that cost is the real cost? If we build a bridge, you allocate 1 billion pesos. How do we know that it should cost 1 billion? Maybe it should cost 200 million. And that's where the private sector can assist and be partners in, yes, let's build that bridge, let's build that school, but it should only cost this much. And any savings can go to other projects.
All right. Perry, just very quickly, from where you stand, from your conversations with fellow executives and investors, how difficult is it for the government to regain the trust and the confidence of the public and of the community?
That is That's a difficult question, but to regain the trust, we need to see actual actions and actual reforms. And now these reforms, hopefully, there will be public and private sector consultation, and let the private sector be part of that reform. When we have a reform, the next phase is the implementation of that reform. So, and that's where the government needs a private sector. If the private sector is involved in the implementation or in the crafting of these reforms, then I think the confidence we can regain confidence first with the business people, and then with the foreign investors. We want these reforms to be felt by every Filipino. And to regain back the confidence, if these reforms don't impact the MSMEs or the businesses, well, we're back to zero.
But Perry, you want a seat at the table, but the president does have what they call the PCAC, the Private Sector Advisory Council. Is that not enough?
The PCAC, I believe, is in the national level. We want to be in the regional, in the local development councils, which is where it starts. All these projects start from the local level, then it's brought up. So right from the start, we want the private sector to be involved. This is what the community needs. This is what our businesses need, and this is what our future, our children needs in the community. Then it's presented all the way up to the national level. So we want to be involved in the grassroots, right from where these discussions start.
Perry, I'm just curious. Your industry, the semiconductors,
Yes.
Semiconductors, electronics, you guys make up more than half of our total exports. Do you have a representative in PCAC?
Yes. To answer, yes. There is an administrative order that was signed recently. There is a group, SEI, the Semiconductor and Electronics Industry, where the private sector there is private sector representation. And we're totally for it. So now our work starts, from a 55% contribution to the export. Now we need to implement and really execute how to bring it to 60-65%.
Wow! And realistically,
Yes, we do have.
How long do you think it will take for you to hit that 60-65%? Hopefully of a growing pie, all right?
We have it in our roadmap. Right now, the Philippines is the chair for the ASEAN. It's time to shine the Philippines, not only the semiconductor, but different industries. We have a lot of the, 11 nations coming in, and plus all the other partners. The Philippines is in the right place at the right time. So let's give the ASEAN and all the visiting delegates why Philippines. And there's a lot to be to offer in the Philippines. The right people, we heard it in previous conversations. We have the right people. They're trainable. So we're glad the academic, the budget is, the academe has gotten a big portion. I think it's 1.6 trillion. But and then the infrastructure, digitalization for transparency. And we like the latest pronouncement about the connectivity. The program has been prioritized that the whole Philippines be connected digitally, internet availability. That gives parity from north, south, east, west of the Philippines. Connectivity gives parity not only in education, but also in businesses. It opens markets throughout the Philippines and also international markets. So that's one key in terms of the future of the Philippines is connectivity.
And you did mention there's a lot for the Philippines to offer. For example, we're seeing all over the world massive AI and infrastructure investment. We aren't exactly taking a big part because we're not producers, we're mostly users. How do we join the bandwagon?
We have programs now. First, there are two. One is on the educational. We want from DepEd in the lower grades to be part of that AI development and skills development, not only as users but also developers. You know, AI is here to stay. It's not going to stop for the next 10, 20 years. It will evolve. But now on the other side is we want to develop develop our students to be part of that developing AI workforce. Then on the other side of the coin is the infrastructure. You know, from data centers to equipment, the Philippines is ripe for creating all those infrastructure for AI.
So Perry, you do wear the hat. We've been talking about it. Now we're going to ask you to wear your different hat as head of the EMS group of companies here in the Philippines. You do contract manufacturing, engineering, and electronic assembly services. Talk to us about the semicon industry for 2026. How do the numbers look like with demand for your products? Clearly, I'm sure up, but with all the tariff noise as well from the White House, we don't have the final numbers for 2025 yet, but SAPI was projecting total exports of semicon and electronics to grow by 23% last year to $48 billion. That's higher than 2024's 39, and that would also beat the growth estimate for 5 to 7% growth. So could you give us a general sense of how the semicon industry is looking for 2026?
Well, Michelle, you said it. Definitely there is growth. There's double-digit growth in the semiconductor. Similarly, there are two sides of that industry. There's the semiconductor side, which is probably 65% of 68% of that industry. Then there's the electronic side. So on the semiconductor side, definitely there's double-digit growth, and we're seeing more demand. And here in the Philippines, we are strong in the assembly, test, and packaging. And one of the emerging talents here in the Philippines is on the chip design. We're seeing a lot of demand on advanced chip design here in the Philippines. And that's one area that we need to develop because, as you know, the AI and chips and advanced chips from EVs to all this gaming will require semiconductors or chips. On the other side, on the electronics part, this is where we're trying to attract exiting companies from China. These are impacted by the geopolitical, the tariff issues from the United States, between the United States and China. So there are companies who are exporting to the United States that are exiting their manufacturing for the U.S. Products, and they're looking here in ASEAN. And we have seen some companies coming to the Philippines, but there are more. But it all depends on what is happening on the tariff between the United States and China and the rest of the world.
And Perry, I'm just curious, with such a positive view that you're sharing with us, does this mean that your company will be investing more this year as well? What sort of expansion can we expect from the EMS group?
For the EMS group, yes, we are expanding. Fortunately, knock on wood, yes, we are expanding. We were able to get on that AI infrastructure bandwagon. We were able to get some wins on that because of the Filipino talent. We could prove, I can't mention the names, but we could prove to these companies that the Philippines is the right destination for manufacturing product, not only for the AI related products, but other consumer products. We're seeing it, and there's a lot of free trade agreements that is on the plate in the Philippines, and we're looking forward for those to come to fruition, and we hope we can get new markets for our members, not only for EMS but for the chamber. One of our tasks is to look for new market potentials for the products and services of our members.
All right. Will you be adding to the workforce, setting up new factories?
Oh, we are expanding, but we have currently our footprint in Region 4A is enough, but we are expanding our factories and also procuring new equipment. And we look forward to more favorable engagements, and we're looking forward to really FTAs to help position the Philippines and our company to new markets.
All right. On that optimistic note, Perry, it was great talking to you. Thank you so much for the insights and the time. We'll see you soon. Hopefully you can join us in the studio next time.
Thank you, Michelle. Yes, yes, and we were planning, but we had visitors.
No
here.
problem.
Foreign visitors and foreign investors. Yes, yes. So
Wow.
next time.
All right. With more stories and news, groundbreaking news. All right.
Thank you.
All right.
Yes.
Thank you, Perry. Time now for a quick break. Coming up, we're bringing the closing numbers at the Philippine Stock Exchange, followed by our market chat with Manulife Investment Management's Mark Franklin. Keep it here on Market Edge. Welcome back. The market is closed and the numbers are in. Let's get one more quick look at today's finish line. 63.55, up 0.75%. Broader all shares also up by 0.5%. Value turnover 7.5 billion. Advancers 102, decliners 106. For more on the markets now, let's bring in Mark Franklin. He is Deputy Head of Multi-Asset Solutions for Asia at Manulife Investment Management. Mark, hi. Good to see you. Welcome back to the program.
Good afternoon. Happy to be here.
All right. So, Mark, we're getting GDP numbers for the Philippines tomorrow. The expectation is it will be weak. The bar has been set quite low, so hopefully it will be easier to surprise the market to the upside. But I wonder, what will the GDP number do to interest rates? Do you think it's going to be lower for longer for the Philippines, so investors should plan accordingly? I mean, what's on your mind regarding this?
Well, within the Philippines, there's still a fairly muted inflationary backdrop, which is also then feeding through into sort of the growth of the value of activity. And so in that sense, the BSP is likely to continue to signal the potential for further rate cuts. But at the same time, they have to be somewhat wary of FX volatility and capital flows, because we're in a world now where there is competition for capital and FDI flows. And what will be really important is to make sure that currency volatility remains very well anchored, because that can also impact eventually inflation dynamics. So by and large, whilst the GDP numbers will be relatively muted, I think that the BSP is more focused on inflation and FX volatility at this point in the cycle.
The peso has been flirting, inching ever closer to 60 to the dollar. What do you make of the peso? Is it a weak peso, or is it just a strong dollar narrative, except for the past few days? The past few days, the dollar has been under pressure, but generally, what's the narrative here on currencies and FX?
Well, more broadly, we're in an environment of cyclical dollar weakness. There's a few reasons for that. One is actually the Trump administration quite likes the idea of a weaker US dollar, because it boosts competitiveness for domestic industrial activity. And there's a big push for reshoring and reindustrialization. And that then has a knock-on effect for other currencies around the world. We've seen capital rotate into places like emerging markets, commodities as well. And in recent days, we've also had a coordinated alleged intervention by the Ministry of Finance in Japan, but also the New York Federal Reserve in the US as well. So there are tailwinds for a number of emerging market currencies, but what we're seeing is particular strength by the commodities exporters rather than the commodity importers. And at the same time as well, those economies that are benefiting from some of the major global growth themes, such as AI investment, semiconductor upcycle as well, they're seeing particular strong capital flows. So those markets, including the Philippines, which are perhaps not quite in that sweet spot, are seeing some benefit in the very short term from a weakening dollar, but perhaps not as pronounced as for other currencies.
You mentioned rotation. Has the Philippines, you think, been benefiting from the rotation out of expensive Wall Street stocks? We have been seeing foreigners net buy this market for a couple of weeks now. And we know, if you look at the calendar, Wall Street is going to be having a very eventful week. Fed decision out early Thursday, Manila time, together with Microsoft, Meta, and Tesla earnings. Apple earnings out next. And then over the weekend, for those in the Philippines, a possible federal government shutdown. Are we expecting more rotation, and will the Philippines benefit?
We think that this year will be characterized by investors diversifying their portfolios into global equities, multiple sectors, multiple factors as well, and multiple asset classes. So we have a positive view on emerging markets and Asian equities. We also have a positive view on rotational forces that benefit things like small caps, pro-cyclical sectors such as industrials as well. And to some extent, that rising tide of interest ex-US lifts all boats. But again, it's the order of magnitude as well. So unsurprising that there has been some net incremental buying by foreign investors into the Philippines as a market that would benefit from that capital moving out of the US and into other markets to capture perhaps high beta opportunities. But we're seeing the most pronounced beneficiaries being, again, those that benefit from extended dollar weakness, reflationary policy as well, and those that are big participants in some of the major global growth drivers that we're seeing move the economic outlook this year and beyond.
All right. Take us around the world or around the region. Mark, where you're saying you're positive on Asian equities, but where would you say is Manulife Investment overweight? Geographically speaking, where are you underweight and where are you neutral?
Yeah, I mean, within an Asian context, our top three picks for the start of this year were Korea and Taiwan, and to some extent Singapore. So Korea and Taiwan, very much beneficiaries of the upcycle in semiconductors. In the case of Korea, a super cycle in memory chips, and Taiwan more broadly from the AI-led drive and demand for production of semiconductors, but also supply chain for major tech companies as well. Singapore benefits from a major drive by the domestic regulator to boost participation in local equity markets. And that's a case really about self-help. So those regulators and capital market policymakers being able to design policy that supports capital allocation towards domestic assets. Where we've been a bit more cautious on are those markets that perhaps started the year at somewhat fuller valuations, or where there's a lack of self-help from a domestic policy perspective. So Australia fell into that category of a market which didn't really have much of a discount. Government policy is not necessarily pro-growth in its outcomes. And so that's an example where we've sort of seen funding source opportunities. And then the rest of the region has been broadly neutral. So if you take India as an example, even though it's had a period of significant underperformance, it continues to be at risk from strong demand for precious metals and capital flow into precious metals at the expense of domestic equities as another asset class as well. But we're looking for opportunities for markets that lag and that create valuation setups, because I think that we're at a point in the cycle now where we've had some strong performance from certain markets, and therefore it makes sense from a risk-reward perspective to look for the next set of opportunities.
You mentioned precious metals. It seems like if you follow the mantra "go for gold," you would have been a big winner for 2025, and maybe even here. How are you liking commodities and precious metals in particular? Do you think gold, which just was it $5,200 per ounce already, coming from $3,500 per ounce late last year? That's a heady run in such a short period of time. Do you think there's more upside here, or it's starting to lose steam or momentum? How much more room?
Yeah, I mean, more broadly, this decade will be about commodities earning their rightful place as a diversifying asset class in portfolios and having quite a diversified approach there. So you're right to highlight that gold, silver, platinum have performed extremely strongly in the last few months. The drivers for that performance are to some extent still intact, whether it's a means of seeking a geopolitical safe haven, it's a means to protect yourself against excessive monetary and fiscal policy stimulus, and therefore seeking to preserve real asset value. It's also a beneficiary of central banks looking to diversify their US dollar-denominated reserves as well. And many of those drivers are still intact. Now, at the same time, given the sheer velocity of the moves, it's quite likely that we go through bouts of consolidation or volatility. But in particular for gold, we think that it has a secular place in portfolios, certainly in the macroeconomic regime that we expect to prevail for the rest of this decade. And then beyond precious metals as well, commodities like copper are facing a major structural supply deficit over the coming years, as demand is held up by grid and electrification investment and AI-driven demand and cabling requirements. At the same time, a lack of new supply coming on stream. And then even commodities like uranium as well, as nuclear power becomes more readily accepted and adopted as part of the solution in terms of energy security as well. So we see this commodities upcycle wave really broadening out, not just being focused on precious metals.
All right. What about fixed income? Well, the expectation that the Fed, so the consensus is the Fed might pause, but it will continue to be accommodative than other central banks, like the Philippine Central Bank seen easing. How attractive or less attractive have fixed income become?
Yeah, we take quite a selective approach within fixed income. So from a curve point of view, we feel a bit more comfortable, again, at the shorter to the belly parts of the curve without taking too much duration or term premium risk. We think that longer dated bonds are still somewhat sensitive to this fairly coordinated and broad-based push to fiscally stimulate economies around the world. It's not just a US story, it's also happening in Europe and China and Japan as well. So that heaviness of new supply issuance from government bonds at the longer dated part of the curve. In addition to that as well, the hyperscalers, when it comes to AI investment, almost $1 trillion of committed investment over the next 2 years. That also requires financing. So you're going to see a lot of investment grade corporate bond issuance as well. So that supply overhang probably means that longer dated corporate and sovereign bonds don't have much of a catalyst for excess returns. Whereas the shorter dated bonds are probably anchored by the fact that we are pivoting more into this easing cycle from a rates perspective, although quite a lot is already priced in. Then from a credit perspective, we like Asian high yields. We still like emerging market debt. These are asset classes that still give you carry, and spreads are reasonable, even though they tighten somewhat in terms of giving you the potential for positive excess returns over and above the duration component as well. So quite selective within fixed income, and we need room in this portfolio to still be looking for those opportunities in equity markets and commodities for the time being.
Mark, before we let you go, just one specific question for the Philippines. Are you neutral or overweight for Philippines? And maybe your expectations or assumptions for GDP growth, which we're getting tomorrow, plus how many more rate cuts by the central bank here?
Yeah, we're neutral in the Philippines. We acknowledge that the market from a valuation perspective is clearly discounted, but from a corporate earnings revision cycle, but also from an economic data surprise perspective, that the country, the market is lagging some other markets in Asia as well. So we're looking for more evidence that growth is starting to re-accelerate. And then from a rate cut perspective, we think there's probably a little bit more room for the BSP to cut, but there's also a requirement for them to maintain a certain buffer in terms of real interest rates, again, in order to make sure that there's sufficient attractiveness for capital to be investing in domestic bonds, as an example, rather than to be chasing high-yielding opportunities elsewhere. So perhaps a little bit more room to ease, but not that much more.
All right. On that note, thank you very much, Mark. Always a pleasure to speak with you. We'll see you soon.
Thank you.
Time now to zip through the top headlines from major business papers and websites from Insider PH. U.S.-based shipping giant United Parcel Service, or UPS, says it is on track to open a new air hub in the Philippines in the latter part of this year. A notable investment as the company unveiled another round of mass layoffs. The planned hub comes as UPS reshapes its business away from lower margin volumes linked to e-commerce giant Amazon, which is set to be completed in 6 months. UPS announcing it will eliminate another 30,000 operational roles this year, following the 48,000 job cuts last year, with reductions mainly tied to the Amazon unwind. From Business World, the government is exploring the creation of an emerging technology board at the Philippine Stock Exchange to allow high-growth tech firms to access public capital. The Department of Information and Communications Technology says the board's design will be based on the NASDAQ-style technology board, which is a U.S.-based exchange known for listing high-growth technology companies and innovation-driven firms. And from the Philippines, Star Ayala-led ASEN may finally proceed with its previously deferred 30 billion peso stock rights offering, or SRO, as early as July to strengthen its war chest for aggressive expansion. ASEN boss Eric Francis says they hope to decide on this by the second quarter. The Philippine Commission on Elections is mourning the passing of its former long-standing spokesperson, James Jimenez. In a formal tribute, the COMELEC expressed its profound grief, noting that Jimenez served the institution and the Filipino people with integrity, clarity, and utmost dedication. Known for his wit and intellectual rigor, Jimenez explained complex legal and technical electoral processes with precision so that the public could easily understand. Jimenez was also instrumental in modernizing the agency by pioneering its official social media channels. Jimenez was a public face and steady voice of the commission for 16 years. The COMELEC adds beyond his role as spokesperson, Jimenez was a trusted colleague and a reassuring presence during some of the most challenging periods in election administration. We're taking a quick break. Coming up, Mattel rides on the K-pop Demon Hunters wave with the launch of Huntrix dolls. Market Edge. We'll be right back. Now here's a quick look at the flash business headlines from overseas. The French government survives 2 votes of no confidence in Parliament over its decision to use a constitutional tool to ram through the expenditure part of the 2026 budget without giving the National Assembly, France's lower house, the final say. The motions came days after Prime Minister Sébastien Lecornu also weathered 2 separate, largely symbolic no-confidence challenges. The full 2026 budget bill now goes to the upper house, the Senate, before going back to the lower house for final approval. But Lecornu is again expected to invoke Article 49.3 in the Constitution to overstep the National Assembly and force through the full budget. This will likely trigger further votes of no confidence. Reuters reports China has approved its first batch of NVIDIA's H200 artificial intelligence chips for import. Sources say the approval covers several 100,000 H200 chips and was granted during NVIDIA Chief Executive Jensen Huang's visit to China this week. The sources add the first batch has been allocated primarily to 3 major Chinese internet companies but declined to name them. A major foul-up at Amazon. The e-commerce giant on Tuesday mistakenly sent an email addressing the layoffs at its cloud computing unit when the planned firing hasn't even happened yet. The email sent by the SVP of Applied AI Solutions at AWS wrongly said that impacted employees in the U.S., Canada, and Costa Rica had already been informed they lost their jobs. But the planned layoffs were supposed to happen today, Wednesday. Reuters reported last week that Amazon intended to lay off thousands of corporate employees starting this week. Sources say jobs in the company's units covering AWS, retail, Prime Video, and human resources were slated to be affected. And speaking of Amazon, it is shuttering its Amazon Go and Amazon Fresh physical stores and converting a number of those locations into Whole Foods Market. The move is part of the company's plan to open more than 100 new Whole Foods stores over the next few years, as it bets on the upmarket grocery brand to help it compete better with retailers like Walmart, as well as delivery services like Instacart. Amazon says it would also expand its same-day delivery service to more U.S. cities this year. And before we go, K-pop Demon Hunters continues its world domination, and now fans of the runaway Netflix hit could soon get their hands on actual merch. Barbie maker Mattel teased fans with a new lineup of dolls and collectibles that will be rolled out this year. The dolls inspired by the Huntrix, Rumi, Zoe, and Mira, will initially be available with 2 looks, including one in their signature tassel jacket and white bottoms ensemble. Members of their frenemy boy band, Saja, boys, as well as other characters will be released across across Mattel's Polly Pocket, Uno, and Little People collector brands, among others. K-pop Demon Hunters is Netflix's most popular film ever, hitting 480 million views in the second half of 2025. It even received an Oscar nomination, further cementing its status as a cultural phenomenon beyond streaming numbers. And that's it for Market Edge. I'm Michelle Ong. Plenty more news ahead. Keep it here on ANC.